All right. So I had a good amount of people wanting me to make a video on breakers, what I look for, how I use them, and all that jazz. So let's dive into them. So you can see here for the bearish breaker, this is the cheat sheet that I posted in the Discord, what I like to see in a breaker. So a high, a low, and a higher high. So on the higher high, we're taking buy side liquidity and we're hitting a higher time frame key level. It can vary anywhere from a 1 hour fair value gap or an order block or whatever up to a weekly time frame or even monthly. It just all depends on the time frame you're trading. These setups appear on all time frames. So we get the move down. It can fiddle around here, but then we're interested when it displaces below the swing low before we made the higher high, because then we're anticipating the retest onto the breaker and the rejection down to sell side. So the opposite for a bullish breaker, you can see here in the image. So when we're looking for breakers, you don't want to enter on the ones that sweep liquidity before they are tested. So here you can see when we're getting the displacement below the low, we get the retest before they send it lower. So here is an example of a a bad breaker, one that I would not take. So we have a low, a high, a lower low, and like I said, it can fiddle around here, but then it gets the displacement above the high. But here it just goes straight for buy side liquidity, so it sweeps the highs and then comes down and retests. This is not one you'd want to be entering on, because then it could give a little bounce but into a fair value gap or an order block, something here, for it to slam it lower into sell side. Because once we've rated buy side liquidity, that's when smart money has accumulated short positions. So then you will see bullish PD arrays invalidated as we go for sell side liquidity. So like this low here and then this low. So as we go into the price action, I'm kind of going to be going over these last two like big price legs on the NASDAQ. So honestly, I'll just start up here at the beginning. All right. So here, we're going to be starting looking at these moves here. So overall, I was still anticipating more downside, because when we were up here, we had these daily equal lows here. So this is external range liquidity. So here's the range. This is on the outside of the range. So the external range liquidity. So whenever we see external swept, we want to see it move back to internal. So when we're up here and we were anticipating a move back down to the external range liquidity, we got it because we formed an SMT here at the highs, SMT here at the highs again, confirming tops, and then they gave the moves lower. So then here, whenever they displaced it low, right here, below this low, when they closed it below this low, this right here becomes your bearish breaker, because you look, you got a high, a low, a higher high, and this higher high here was sweeping liquidity into a higher time frame PD array as well. I could mark this daily fair value gap for you. All right. So right here, it gets that displacement below the low. So here's your bearish breaker. It is a very big range, and it's on the daily time frame, so you can anticipate moves higher into it. You don't want to just be shorting the bottom of it just because it is a breaker. You want to make sure the other time frames line up to do that. And in this case, it didn't, because like I said, we rated external range liquidity here. So we wanted to see moves into internal range liquidity. And whenever I move down to the 4 hour, you can see the internal range liquidity a lot better. because you can see here, so this green line here, that's that external range liquidity that we swept. So we're sweeping it, we came back down, left equal lows for us to come back to later, because then once they displaced it here above this high, that formed a breaker, because you can see we have a high, a low, a lower high, and then a lower low, sweeping these stops, and then it fiddled around here like I said it can, and then boom, the displacement above the high, they gapped it down onto the breaker, and then they sent it. So you can see here, once they form this breaker, you can anticipate moves higher, because then we have the internal range liquidity up here, because through here there was nothing. We had an open fair value gap here for bulls to run it through. And they did. We got the move straight up into internal range, which was also the daily fair value gap, which was lining up with the bearish breaker, because here was that bearish breaker on the daily, because it's even all red candles on the 4 hour. So if I mark that up and moved it over, you can see how well we respected it, even when we were here, like when we were seeing the rejections. So then you see the displacement up above showing we're strong, moving inside of it, and then they come down, and then right there, once they get that close back above into that, that was enough to know that they were going to send it higher. So then we start getting the rejection up here. So we're anticipating more downside from there, because if you look at this level still looks like support here. This was not a good enough sweep, and we left daily equal lows. So that was screaming for us to go back down again. So up here, I called for the higher time frame market maker sell model, and I called top in this wick. Don't believe me, you can go look at my Twitter, I don't care. So here, this would be a breaker I'm looking to short, but this is just an example where we moved straight to liquidity, and then we never even came back to test this one. So it just would not have worked. I didn't get a short there, and no one else would have. So I did get a shorting the turtle soup here above these highs, because I called for the lower time frame market maker sell model to here, to this low, because I anticipated us to move back up off sweeping these equal lows into an order block, and because these are also times when you can anticipate turtle soups before a breaker forms. So if there's times like this when we have liquidity sitting here and a higher time frame key level below it that we can bounce on like this, you can expect turtle soups where breakers should form. Because here, if we had closed below this low, we would have formed the breaker, but instead we turtle souped it because we had a higher time frame PD right here and liquidity getting swept, and then they saved the drop for the next day. So so my interest really shifted right here whenever we got this move down below this low, because like I said, once we get the close below here, we'd form the breaker, because we have the high, the low, the higher high, sweeping buy side liquidity, and the internal range liquidity into a higher time frame PD array. So here, the displacement below the low, that makes this a breaker. So then you can see they give the retest back up into it, and notice they come and sweep liquidity before they take it down, and they take liquidity and they hit the high of the 1 hour breaker, and then they sent it lower to the equal lows I was calling for and the other sell side targets, because like I said, we are in a higher time frame market maker sell model. You can learn this whole setup just from the 2022 mentorship on ICT's YouTube. It's free, but nobody wants to put in the time. So we made a high, a low, a higher high, and they sent it down. So we made another breaker here. So then you can see the displacement down, they came back up for the retest, and then they slammed it right back down, swept the lows. Another way you can look at this, obvious, accumulation, manipulation into the higher time frame PD array, and then boom, they distribute it right back to the lows. And in this case, they did give another sweep of equal lows into a 1 hour order block, and they rallied it. We played longs this day as well. So even though I'm so bearish on the higher time frames, I know you got to look at liquidity and all time frames to see if we should bounce at lows or if we're going to accelerate lower. Because in this case, we shouldn't have, because we're sweeping liquidity into a higher time frame PD array again. So comes back up, gives the retest, and they take it back lower. But what happens here on this retest higher again? This forms another breaker, because you can see a high, low, higher high, because it sweeps this high here. So this swing low here, this is a breaker. So then you extend it, and you can see here, we get the closes below the low, and it comes down, comes back up, gives you the retest of the low of it and the order block, and then they slam it. So there was that one. And then here, this was recent callouts that I've been talking about. So I'll go down to the 15-minute time frame for this one. So this is another example of us rating external range liquidity. So we got the moves back down to the daily equal lows that I was talking about, that I wanted the second set of equal lows. So we rate external range liquidity. So we want to see a move back to internal range liquidity. So up here, you can see we have equal highs that also line up with a daily fair value gap. So looking at the 1 hour here, they take it down, they sweep these equal lows here, which is this black line. So they sweep the daily equal lows, and then boom, they give displacement above this high, form the breaker, and then you can see it comes back down, retested the breaker inside the fair value gap. They take it higher, they soup these highs, came back down to sweep these stops for one more test of the breaker, and then they sent it. This was some pretty sloppy delivery in here. We sat out for a good amount of this portion in the Discord, I remember talking about, because it was very sloppy on lower time frames, just up and down. But getting back to it, it's another thing. You're anticipating a turtle soup at internal range liquidity into a higher time frame PD array, because we're still expecting lower prices. Because the reason I was expecting lower prices still was because looking at the daily chart, this green level here, when we were still there, so let me just do this. So when we're here moving up into that daily fair value gap, this green level here looks like support to everyone buying. So everyone's buying, putting their stops below that low, thinking this level is huge support. Because I'm telling you, everyone was looking at it. They're like, oh yeah, we're bouncing here again, baby. Look at the curl up. Look at that curl up. Right? So, sweeps eyes, sold off. So then now we will get into today's price action. So here on the 15-minute time frame, we have a clear accumulation phase here. Here's your manipulation, distribution. The power of three is always playing out somewhere. You just got to find it. So in this case, the power of 3, so the accumulation phase, whenever we get the move back above the high after the manipulation. So for one, you can already be expecting manipulation once you see accumulation like this, because 9 times out of 10, it's a fake out move. So they give the fake out, and then they displace it back above this high, forming a breaker. Because look, you got your low, high, lower low, and then displacement above the high. So mark the up close candles, extend it out. There's your breaker. And so here's the buy side liquidity, and then the other higher time frame draw, which was the gap. And so I said in the Discord, I saw moves back up to the gap, and then especially once we saw the displacement up here above it, I was confident we were going to move up there, because then here they rejected this order block, took it down for a stop run, rated stops onto the breaker, held, and then they sent it. Because if you notice, the high they made before they came and retested the breaker, we didn't sweep buy side liquidity. So this was a valid breaker. So move up, buy side liquidity, there's your TP1, and then TP2 is the gap. All right, and then I anticipated a rejection here at the gap, and that played out very well. So reasons I anticipated a rejection here. So there was multiple reasons. DXY has been extremely bullish, like I've been talking about for a while. And then, what do you know? Another breaker, a 15-minute breaker here. So you can see we have a high, a low, a higher high, and then displacement down. And then here we came back up, retested the breaker along with the gap, sweeping buy side liquidity with the higher time frame draw still lower. Because like I said, we had a daily gap down here that I believed was the draw, and we drew right into that today. And another reason I was wanting to see us go lower, so if I mark up this weekly fair value gap here and get the 50%, this white level here is the 50%. We opened the day below the 50%. That showed me enough that I needed to know that we were weak today. And then we sold off. And then here, whenever we come back up, get the retest, look at the rejection. Look how accurate that is. Hitting the gap, higher time frame PD array, breaker, sold off. So I've already showed you 2 breakers from today. All right. There was another one right here. So I said it in the Discord, if we got a 15-minute close below this low, we formed the 15-minute breaker. So then you can see right here, we barely got the close below, but we did. Displacement as well. So marking up the 15-minute breaker here, because this was the swing low, because you got the high, low, higher time frame PD arrays being hit, sweeping buy side liquidity, displacement down, comes back up for the retest of the breaker, and then they send it lower into sell side liquidity that I had marked, and the daily gap. And then times like this, you can get more accurate, because breakers like this, whenever they're a big range, like this is a 30-point range. So I mean, you can easily get yourself in a lot of drawdown, and it'll be looking ugly before it looked pretty. So this is why you look at other PD arrays to get more accuracy. So this 15-minute fair value gap here, if you mark it up and get the 50% of it, look how well we held that. Look how well we held that. The wicks do the damage, bodies tell the story. And then not to mention the standard deviations projected to the low, and then this was the weekly volume imbalance high. So those were not random projections, that's for sure. And you can get even more accurate, because there was a BPR here. You can see if we wicked up into it, and rejection back lower. I mean, it's the same setups repeating day after day. And okay, so here's another thing with the breaker. So if you're looking here on the 5-minute, you can see we had a 5-minute close above it. But so this 5-minute close was the first 5 minutes in the 15-minute candle. So here, as this 5-minute closed above, there was still 10 minutes left in the 15-minute candle to hold this 15-minute breaker. And the reasons you could anticipate the moves back down to hold the breaker for that candle is if there's anything else to support that idea. And in this case, you can see this up close candle here. You got a 5-minute order block. So rejects the order block. I mean, you can see with how well the candles respected the low of it. Rejected, and then this candle here was, or it was actually this candle here was the close of the 15-minute candle, and then it held the breaker, as you can see. So things like that to play in Confluence, because like I said, this is a valid breaker entry because this place below the low, in this low, we did not sweep the sell side liquidity. So the retest, valid retest for lower. And then, like I said, if you've made it this far in the video, you get even more sauce. So you take in midnight price. Just look how well, like if you're not using midnight price and breakers, I don't know what you're doing. So your best buy setups form below midnight price and your best sell setups form above midnight price. So you can just see how well midnight price was a magnet all goddamn day. And you can see the retest that they gave up into the breaker was above midnight price. It's giving you all the confirmation that you need to short, as well as the true New York Open was the same price nearly as the midnight price. So that was even more Confluence. So that was really what I got to say on breakers. You just want to take in the higher time frame order flow and analysis to gauge the direction for if a breaker should form or turtle soup, and using SMTs as well, because we've seen an SMT at every high confirming the tops. So with that being said, I hope y'all got something from this video. Drop a like and let me know if it helped. So yeah, have a good one.